All right, let's dive into the latest crypto market trends for December 15th, 2025. Look, if you're based in the US, you need to listen up. Ignoring what the US Treasury yield curve is screaming right now, well, it's the biggest mistake you could possibly make. It could literally cost you the entire 2026 bull run. And here's the crazy part. While everyone is totally fixated on Bitcoin going sideways, a tidal wave of institutional cash is quietly pouring into two very specific altcoins. Stick with me, because by the end of this, you're going to know exactly where that smart money is heading, and more importantly, why. Okay, first up, part 1. Bitcoin's precarious position. We need to talk about the serious warning signals the market leader is flashing right now. So, on the surface, everything seems okay, right? Bitcoin's hovering just under 90,000 bucks. But you can't let that fool you. This price is basically a mask, and it's hiding some major underlying weakness that most people are completely missing. And here is the disconnect, plain and simple. On the one hand, you've got this strong price tag, but then you look at the real data, and the Bitcoin leverage ratio has absolutely cratered. It's at a yearly low. You know what that means? It means the pros are getting out of their risky, leveraged positions. They are not confident. They're getting ready for a drop. And this isn't just a hunch. It's already happening. Major alts like ETH, SOL, and ADA are already starting to slide because Bitcoin is getting hammered with year-end profit-taking. The retail market is nervous, but the big players, they're making their moves somewhere else. Which brings us perfectly to Section 2, the real money flow. This is where we pull back the curtain and see where the institutions are quietly placing their bets while everyone else is distracted. So this is the million-dollar question, isn't it? If the smart money is backing off from Bitcoin, where in the world is it actually going? Well, here's your first clue. A whopping $33.6 million in a single week has poured into Solana Spot ETFs. Now, let me be clear. This is not retail money. This is a massive signal of institutional demand building up. And it's not just a one-off with Solana. Check this out. XRP Spot ETFs have now seen inflows for 30 straight days. That is an entire month of consistent, institutional buying. This isn't some random spike, folks. This is a deliberate, calculated strategy. Let's just call it what it is. This is a massive divergence. While money is trickling out of Bitcoin and Ether funds, we are witnessing a huge rotation of capital into these specific alts, right under everyone's noses. The mainstream is going to be late to this party. So that brings up the why. Why is this happening? That's Section 3, global shockwaves. We have to zoom out and look at the huge macro pressures that are forcing this entire market shift. Okay, don't let the jargon intimidate you. This is just a simple chain reaction. Step 1, the Bank of Japan jacks up interest rates. Step 2, at the same time, U.S. short-term rates are set to fall way faster than long-term rates. When that happens, Step 3, the U.S. Treasury yield curve steepens. And all that really means is that the market is betting big on future growth. It's the classic signal that giants like Goldman Sachs used to predict a major economic boom, specifically in 2026. And hey, it's not just one opinion. Citigroup is out there publicly forecasting this exact steepening of the U.S. Treasury yield curve. When this happens, it's a signal flare that the market expects stronger growth and higher inflation, which is the absolute perfect storm for risk assets like crypto to just explode. Okay, so this brings us to the most important part, Section 4, your strategic takeaway. This is how you take all this information and actually position yourself for what's about to happen. So let's recap the mission-critical intel. 1, the market looks calm, but it's an illusion. 2, Bitcoin is flashing weakness with low leverage and tons of profit-taking. 3, the smart money is already rotating into Solana and XRP. 4, the reason for all this is the global macro picture. And 5, the key signal. That steepening U.S. yield curve is basically screaming that a major economic expansion is right around the corner. We are at a critical moment. If you want to stay ahead of these seismic shifts, you need the kind of insider analysis we give you here at Crypto Global News. So do it right now. Smash that subscribe button and absolutely obliterate the bell icon. Trust me, you cannot afford to miss what's coming next. And for those of you who want the real alpha, the uncensored alerts before they even drop on this channel, scan the QR code you see on the screen or use the link in the description and join our private Telegram group. That's where you get the info first. But hold on. we're not done. This whole steepening yield curve thing, it doesn't just benefit a few random altcoins. No, it signals a massive shift of capital toward one specific crypto sector that is poised for absolutely explosive growth in 2026. And in our next explainer, the one right here on the screen, we're going to reveal exactly which sector that is. Go ahead, click it now.
Stay ahead in the crypto market. Subscribe now for the latest global news and updates.